What's going on, guys? Welcome to the next section. So in this section we're going to talk about support and resistance. Some of you may have heard these terms already. What I recommend is, even if you've heard this already, to look over this section because everyone does it very differently. I'm going to show you the way I do it, which is, I would say, non-traditional. And for those of you who don't know this, pay very close attention because it's actually a very important part of trading. Alright, so what is support and resistance? Alright, let's just start with, let's say we have some sort of buildings. Alright, and let's say we have like a super bouncy ball. What happens when we throw this ball? Right, when we throw this ball, it's going to bounce off the floor here. Then it's going to jump on here. Let's say it's going to come down here, jump on here, jump on here, and probably jump on here, right? So what's going on? This ball is finding what we would say support on all these levels, right? It's finding support here, it's finding support here, it's finding support here, finding support here, right? So if you were to draw it out, you could say that in the future, this ball might find support somewhere here. There most likely will be a building somewhere along these lines, and it's going to bounce off those areas. Alright. Now, what if these floors also had floors in between them? Alright, so for example, what if this ball went in through here, found this support, but then there was a ceiling, right? This would be our resistance, and then it found support here, and then let's say this top part extended, found resistance, and then there was no more support here, so it just fell back down to the ground. Alright, so this is called support and resistance. Whenever you have a chart, you're going to have something that forms a sort of floor, which is your support, and something that forms a ceiling, some sort of resistance. And typically what the graph is going to do, what the charts are going to do, is they're going to try and stay between those zones, right? So they're going to keep bouncing back and forth between those areas, aka they found support and resistance. Alright, so in a chart it might look something like this. It might go up, then down, then up. Let's say it goes back down here. Let's say it goes up here, then here, then here, then here, and there. So you get it, right? There's certain points where you kind of see what's going on, right? You see what's happening. So how does this help you? Now you know that every time, let's say it was approaching this area and you didn't know all this was going to happen, you know that here it's had a point before where it's bounced off. Alright, it's also gone through it, but there's a chance that it could bounce off, so you're getting ready. Now if you start seeing signs that this is starting to go up, you see some sort of sign of reversal, you know that you can enter a trade here and take it up to the next resistance level, which would be here, or let's say you already knew from a previous point here, right? So you could take profit here, you could let it run, see if it keeps going, and then take profit here, right? So this gives you areas of entry, and it gives you areas to get out of the market. Now, why is it called support and resistance? Because supports can become resistance, and resistance can become support. So, I know that sounds a little confusing, but let's say we have all these levels, right? If we have a graph here, say starting here, and it hits here, this is our support, right? Support is floor, so it's our support. Now let's say it goes up, it hits this area and bounces down, right? Because it was rejected by it, this is the ceiling, right? This is the resistance. Now it's going to come back down to support, but what if it breaks through? Now if it breaks through, this is no longer the resistance, it's no longer the ceiling. We're looking for this next area to become the resistance or the ceiling. And this will now become the new support or the floor. Right? So you have the ceiling and you have the floor. So maybe go something like this, something like this. So what you would do here is, as soon as it comes back down to test, and you see that it's formed a solid support here at this level where it was previously a resistance, you know that here you can take it up for a buy. And you can buy this the way up. Same thing going down, right? Just like here. This was resistance. This was support. So you're like, okay, this might be support, but it broke through. Because it broke through, you're like, okay, this might be a new level, a new area. Let me see if it comes back up to test it. So what it does, the market does, is tests. So let me see if it tests this as a new resistance or as a new ceiling, right? So this now becomes a ceiling. This is no longer the ceiling. This is the new ceiling, and this is the new support. So now you know that you can sell this, meaning that it's going to go down. And you can sell this all the way either to this point or see how it reacts here, and if it decides to keep going. And you can just keep writing it. Alright, so that's the basics of support and resistance. Now, traditional way of finding support and resistance is basically looking at a chart, just like how we said now. Alright, let's say we have a chart like this, and it goes like that, then here. So traditionally what you would do is, obviously some of these points, when I'm drawing it now, it's pretty obvious, right? This point here, and this point here, it's creating a pretty solid place where this could, let's say we can predict that in the future, it might come down this way, and then hit here and bounce off, right? We also have this point, so it's points that you're finding that have similarity, right? Like this point, right? So you saw that it hit this point, it hit this point, it hit this point. So we're like, okay, we could draw a line through here. There's something going on here. In the future, it might come up here and maybe get rejected and become a resistance because of previous points. Now, there's a reason why this happens in the market, right? It's psychology. So let's say majority of the people in the market, they start seeing price get to this area. So let's say this area is, let's say it's, I don't know, 100.55. So let's say every time it gets to 100.55, there's something that happens, right? Although sometimes it crosses through, but it tends to come back to that level, right? That's because of psychology, right? People are, whenever it's approaching this area, they're like, it's gone too high, let me start selling, right? So everyone starts selling. Banks start selling. And because everyone starts selling, right, the market starts going down. Same thing here, right? It's gone too high, whatever this level might be. And that forms another level. So this is 100 point, I don't know, just making up numbers, 0.95. Right? People psychologically are like, that's been a previous level maybe in the past. It's been a level where people have decided that the market should turn around at that point. So what does the market do? It turns around at these points, right? So that's basically how you would find, right? This one didn't quite reach it. So it's much easier, obviously, when I'm drawing it right here. But if we're to look at an actual chart, so let's go and actually look at a chart. So let's look at a traditional chart. So this is a candlestick chart, right? Each candlestick here is 15 minutes. So each one of these represents 15 minutes of time. And you'll see green candlesticks and red candlesticks signifying upwards movement or downwards movement. Now, here, right, it's not like what I drew. It's not as obvious, but you can see some levels that keep repeating, right? Some places where price tends to, it looks like it's bouncing off, right? So we probably have one maybe around, say, here, right? If we look, we might have maybe this area here, right, where it bounced off. So it bounced off here. Let me circle this for you guys. So actually there's going to be a homework attached to this section where you guys are going to find support and resistance. Don't worry, I'm going to explain to you how it is that you can do this assignment to help you guys out. So here for these lines you have all these points. Alright, so the more touches you have on a line, the stronger of a support or resistance it becomes. Right, this one here we would say it got rejected because, see, it's green, but then it came right back down. So this point, this point, this point, right? There's 3 points of confirmation right there. Then there is somewhere in this area where it bounced off here, bounced off here. Right, so we might do right around right here. So we have this right here. This right here. We have this right here. Okay, so the wicks are where price tried to go to, but it didn't quite make it. Right, this is where price actually stayed. So you're gonna have the candle and the wick. Right, so it's a candle and a wick. If we zoom in closer, so you can see this is the candle and this is the wick. When it's a really long wick, it means that at one point this was a big green candle, and at one point it looked like price was actually going down. It was red, right? Because it was going down from this point. So it was a big red candle, but it came right back up, right? It means that price tried to go down. They tried to push down, but it came right back up. So the market didn't like that. Right? You could also come down and say that this is also support and resistance level. Right, because you have this point here, you also have this point here. Alright, so that was not as strong. Sorry, I keep clicking. It's not as strong, right? You also have this point here, probably, where you have this point, maybe this point. So these are not as strong because it's very slow movement. You typically want to catch aggressive movements, right? So the more aggressive the movement and it gets rejected by that area, the stronger of a level it becomes, right? Because imagine a ball, imagine a falling ball, right? It's falling really fast, and it's been falling for a while, and all of a sudden, boom, it bounces off. If it bounces off that area, that's most likely a very strong level of support or resistance. All right. So this is typically what it's going to look like, right? It's not as clear, so I'm going to show you a little more advanced ways, right? First, I'm going to show you the one that's a little more advanced than this, and then I'm going to show you the method I use for actually finding support and resistance, which makes it very, very clear, right? So the other way that you can do this is by using a line chart, right? So a line chart is going to wipe off some of the noise, right? You're not going to see, it doesn't consider the wicks, but you might not find points like these, right? So here we would have drawn maybe our line here, but then you don't have this touch here. Here we didn't quite touch it. It's maybe somewhere along here. So it seems a little more confusing, right? It's not as, it's a little more clear, right? There's no noise there, right? So here you can see clear touches. There's only 2 touches, and it's not strong, right? It's not a really strong movement like this down movement. It's not like a big fall like we had here. So sometimes it can help out. Sometimes it might not. If we go back to candlesticks, we can see where price actually was. So if we see this was a good level here, but then here we might have wanted it to reach this point before we decided to take it down, right? Or here, it never quite reached this area. So maybe we would have waited until it actually kept going higher before we sold it, right? But it started already going down. So for your homework, let me show you what it is that you're going to do for your homework. So for your homework, when you go into your program page, you're going to see down here a button that says homework. When you click on that, it's going to open this sheet. So what you're going to do here is you're going to do basically what I just showed you. You're going to start marking up these zones of support and resistance, right? So wherever you see that there's a lot of action going on, right? A lot of rejection, that there's maybe a big spike, right? I'm going to help you guys cheat. I'm going to show you one area, right? So let's say this point here, right? It's been coming down for a while. You have this point here. You look to this side. Oh, look, there's another point here that's nearby. Some of these points here, right? So this might be a strong point of support or resistance. Now, what you're going to do is, you see this red line, what you're going to do is you're going to mark up everything to this side of the line, right? And we're going to pretend that we don't know this side. Now, without you looking at this side, of course, try not to cheat, you're going to try to see if whatever support resistance lines you drew on here match up to any of the levels here, and if they actually help you to predict the levels that this was actually going to be at. Okay, so you know where the trade was going. Now, similar to what we did here, if we go to line, right? So the reason I'm making you guys use line is because it removes a lot of the noise, right? There's not a lot of wicks, there's not a lot of colors going on. It makes everything a lot simpler, right? So if we were to erase everything here, now we could see that, look at this point where it came down heavy, and actually from this point is where it started rising all the way up, right? So this looks like a very strong level here. And guess what? If we mark this area, that's actually where this came to a halt. You see where it stopped here? So if we didn't even know all this other side, let's say from this side onwards, all of this we didn't know it. All of this we didn't know. If we even look here, right, we have this strong point where it bounced off. Right, this could be an area. Here, even going up, right, it got rejected there a little, went down, kept going up, and even when it went up, it got stopped right there, boom, right? So you see this point here. And look, even if we didn't know all this on this side, just from these points that we drew up, look at that, that's perfect. This lines up with this. This point here, which we got it from here and here, lines up with this point. Right? We actually got it from this point, very strong point. And then we also have this point where this was rising, 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 all of a sudden, boom, got cut off. Right? That means it's a very strong point. Well, look at this here, bounced off. Eventually it cut through, but it bounced off here, right? And I'm sure if I put candles, you're going to see some sort of almost touch here. So this is going to help you even here, right? We have all these little points. Came back down. It wouldn't go higher. We also see a repetition of this level over here and a little bit here. All right. So as you can see that these points actually kind of help you see what's going to happen in the future, right? If the area starts getting nearby and you start seeing that it's losing strength, right? One sign of it losing strength is that you're going to start seeing wicks, right? Here you see these two wicks. That means that price tried to go through there, but it couldn't. As soon as you see that, you can sell here, right? Even here, you see that it got rejected, right? That it tried, but didn't go through. Here, it even tried going higher. Try going a little higher. You start seeing these three wicks up to the top, right? And it started going down. And then as soon as you see it go below this level, that this has been a strong level for a while, right? That it's been rejected, it finally cut through. And here at this point is where you're like, okay, I can go in for a sell. And then you have this point here, which was strong in the past too, and you're like, I can go in for another sell, right? And then here, if it comes back up to test like it's doing now, you could probably go down for another sell. Now this is where you would have to know when to reverse, right? When is it time to stop selling? When is the time that it's going to stop going down? Well, here you can see strong, it stays in the area, not for too long. and there's some wicks, and then it goes down. Here too, there were some wicks and goes down. Here, it's been lingering here for a while, right? So that could be a sign that yes, it might go down maybe a little bit, but it's probably going to come back up, most likely. All right, so those are things that you have to keep an eye out. That's more advanced, don't get that, don't let all this stuff get to your head. For now, just do this exercise that I said. Use the lines that I gave you in the sheet. Mark up your supports and resistance, whatever you see relevant, right? There's no true right answer. Obviously, mark up the most prevalent points, the ones that there's a lot of rejection, okay, or a lot of bouncing off, right? Like this point here, just starting going up from this point. And those are most likely going to be your strongest levels, right? You don't want to draw a line every single point, like here, 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 here. Then you're going to have too many lines. It's going to be too confusing. You're not going to know when to buy, when to sell. The areas are too close, right? You're not going to want to have too many lines. Okay, so that's the homework I have for you guys. Please go ahead and do that. And now what I want to cover is a little cheating sheet, a little cheat area. Now you guys don't have to dive into this yet. I'm just doing this out of pure geekness, just because I love the technicals behind trading. But I'm going to show you guys something that actually makes all this kind of easier. Now, what we have here, so this is a candlestick chart, right? This is the same one that I was showing you guys. It's this one right here. This one right here. Okay. It's squished down because I put half of my screen. Please ignore all my indicators, all this stuff. Let me hide this for you guys so it's not confusing. Okay. These vertical lines are just time zone lines. Again, don't mind that. I don't want you guys to get confused. Just trying to show you something. So I'm just showing you for later. Like, don't get too caught up in this and what I'm showing you now. But look at the difference between this chart and this chart, right? Doesn't this chart actually look a lot cleaner? Here. So these are actually the same charts right here. So this peak right here is this peak right here. This peak right here is this peak right here, right? This point down here is this point right here. This one over here is this one over here. Now, as you can see, it's way clearer, right? There's no scrabble, there's no too many lines or anything, right? It's kind of actually pretty obvious, right? If we draw a line here, right? It's pretty obvious here. Look, you see those multiple touches, right? Even here, this whole area, right? It's pretty obvious too. All of this. Alright. So this is something I'm going to show you guys. This is a little cheat you guys can do later. So this is how I actually mark up my support and resistance. But before you guys can do this, you have to learn it this way, okay? If you don't learn it this way first, the hard way, you won't really understand the concepts behind the way I'm going to teach you later in the future. Okay? So make sure you do this. Do the assignment, okay? You guys are going to have the answers right here. Please do not look at the answers, obviously. Do the homework first. Once you mark it up, and you at least do like 3 revisions of your homework, right? Mark it up 3 times. Then you can go ahead and look at the answers, okay? Now, I'm also going to add here, there's going to be, it's a dummy template I have of Tony Robbins here. There's going to be here a homework explanation. So I'm going to add a video here for you guys, and you're going to be able to see why it is that I chose those points. Alright? There's no true or right answer. There are some main points where you should have. But please go ahead, do the homework first. Do not cheat, and then look at the answers later. Okay? As I put here, you're only cheating yourself. Alright? So, I'll catch you guys in the next section.